Welcome to a journey towards financial literacy, where we demystify the world of personal finance and investing. In our fast-paced, ever-changing world, understanding the fundamentals of finance and investing has become more critical than ever. It can be the difference between living paycheck to paycheck and achieving financial freedom. Over the course of this video, we will peel back the layers of personal finance, from understanding your income and expenses to mastering the art of saving. We will delve into the world of investing, breaking down complex jargon into simple, understandable concepts. We'll explore risk and return, and how to strike a balance that suits your financial goals and risk tolerance. This journey is not just about accumulating wealth, but also about gaining the knowledge and confidence to make informed financial decisions. So, buckle up, and let's embark on this journey towards financial freedom. And let's start by understanding the basics. Scene script. First off, we need to understand what personal finance actually is. Picture this. You're in a boat, and the boat is your life. The money you make is the wind in your sails, pushing you forward. Personal finance is the compass and the map, helping you navigate towards your destination. Personal finance is, at its heart, all about money management. It's about understanding how much money you have, where it's going, and how you can best use it to reach your goals. But it's not just about counting coins and saving pennies. It's about making conscious decisions that will shape your financial future. One key aspect of personal finance is budgeting. Think of budgeting as your financial blueprint. It's a plan that outlines your income. That's the money coming in, and your expenses, the money going out. A well-structured budget gives you control over your money and helps you make informed decisions about your spending. Another vital part of personal finance is saving. Saving is like planting a seed today so you can enjoy the fruits tomorrow. It's setting aside a portion of your income for future use, whether for emergencies, big-ticket purchases, or your retirement. Then there's investing. If saving is planting a seed, investing is nurturing that seed so it grows into a bountiful tree. Investing is taking a portion of your savings and putting it to work, so it generates more money over time. It could be in stocks, bonds, real estate, or even starting your own business. And finally, there's managing money. This involves keeping track of your financial activities, understanding your financial risks, and making sure your financial decisions align with your life goals. It's about making your money work for you, not the other way around. In a nutshell, personal finance is the art and science of managing your money. It's about making wise choices today that will help you create a financially secure and fulfilling future. It's the compass that helps you navigate the financial seas, guiding you towards your financial goals. Remember, personal finance is all about making smart decisions with your money. Now that we've got personal finance down, let's delve into the world of investing. Investing, in its most basic form, is the act of putting your money to work for you. It's about allocating your resources today in hopes of reaping financial rewards in the future. Think of it as planting a seed and nurturing it over time, eventually yielding a bountiful harvest. First up, let's talk about stocks. When you buy a stock, you're essentially buying a piece of a company. Your return comes from the company's success. If the company does well, the price of the stock goes up, and you make a profit when you sell. But remember, with higher potential returns come higher risks. If the company performs poorly, the stock price could go down, and you could lose money. Next, we have bonds. These are kind of like IOUs. When you buy a bond, you're lending money to a government or corporation for a set period. In return, they promise to pay you interest at regular intervals and to return the principal at the bond's maturity date. Bonds are generally considered safer than stocks, but they usually offer lower potential returns. Then, there are mutual funds. These are investment vehicles that pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. Mutual funds offer the benefit of diversification and professional management, but they also come with fees and other costs. Aside from these, there are other investment vehicles too, like exchange-traded funds or ETFs, real estate, and even commodities like gold and oil. Each has its own set of characteristics and risks, and it's crucial to understand these before you invest. Investing is not just about making money, it's also about planning for your future. The money you invest today can provide a stable financial foundation for your retirement, your children's education, or even that dream vacation you've always wanted. Remember, investing isn't a get-rich-quick scheme. It's a long-term commitment that requires patience, discipline, and a good understanding of risk and reward. Investing is the key to growing your wealth over time. In the world of investing, two words you'll often hear are risk and return. They go hand in hand, like two sides of the same coin. The relationship between these two is a fundamental concept in the investment world. To put it simply, risk is the possibility of losing your investment, while return is the profit or gain you make from that investment. Imagine walking on a tightrope. The higher you go, the greater the thrill, but also the greater the danger of falling. That's pretty much how risk and return work. The potential for higher returns usually comes with higher risk. On the flip side, investments with lower risk generally yield lower returns. Now let's talk about different investment vehicles. Some are riskier than others. Stocks, for instance, can provide high returns but come with a high level of risk. On the other hand, government bonds are considered low-risk investments, but the returns are often modest. So, how do you navigate this tightrope? This is where diversification comes into play. Diversification is the practice of spreading your investments across various assets to reduce risk. It's like not putting all your eggs in one basket. If one investment performs poorly, others may perform well, balancing out your overall return. To illustrate, suppose you invest in a mix of stocks, bonds, and real estate. Even if the stock market takes a dip, your bonds and real estate might still be stable or even thriving, mitigating your losses. Keep in mind though, diversification doesn't completely eliminate risk. It's a strategy to manage risk and potentially increase returns. To wrap it up, there's no such thing as a perfect investment. Each comes with its own set of risks and potential returns. The key is to understand these elements and choose investments that align with your risk tolerance and financial goals. Understanding risk and return is crucial to making informed investment decisions. You're now ready to start your investment journey. But where do you begin? It's simpler than you think. The first step is setting clear financial goals. Are you saving for a house, your child's education, retirement? Maybe you just want your money to work harder for you. Whatever your goal, having a clear target will guide your investment decisions. Next, it's time to create a budget. Yes, the dreaded B word. But fear not, a budget is simply a plan for your money. It helps you identify where your money is going and where you want it to go. It's a vital tool in your investment toolbox. Now with your goals set and your budget in place, you're ready to open an investment account. There are many types of accounts out there, from brokerage accounts to retirement accounts. Each has its own advantages and disadvantages, and the right one for you depends on your financial goals. Once your account is open, it's time to choose your investments. This is where things can get a little tricky. There's a whole world of investment options out there, from stocks and bonds to mutual funds and ETFs. But don't let that overwhelm you. Remember, you're not trying to beat the market. You're simply trying to achieve your financial goals. So start with something simple, like a low-cost index fund. As you become more comfortable, you can start to explore other options. And finally, remember that investing is a long-term game. You're not going to get rich overnight. But if you stay patient and stick to your plan, you'll be well on your way to achieving your financial goals. Remember, the journey of 1,000 miles begins with a single step. Today, we've taken the first steps towards financial literacy. We've journeyed through the realms of personal finance and investing, understanding what they are and why they're crucial to achieving financial freedom. We've grasped the basics of investing, the art of making your money work for you. We've delved into the concepts of risk and return, realizing that they are two sides of the same coin in the world of investing. And we've discovered how to kickstart our investment journey, taking those first, significant steps towards wealth creation. The importance of financial education can't be overstated. It's the key that unlocks the door to financial freedom. It's the tool that empowers you to take control of your financial future. Write down these major takeaways and memorize them every morning. Don't forget to subscribe, comment, and hit the notification bell for more insights on money and wealth. Until next time, keep investing in your financial education.